Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart. Today I'll be looking long term at New York coffee. Well, this commentary is a little different from the other long term technical analysis commentaries which I produce at the start of 2025, or 2026 now actually. You see, I've been commenting on the long term monthly patterns for New York coffee now on a regular basis for 40 weeks as part of my weekly New York and London coffee commentaries. Video commentaries, and I think what I said there covered and now still covers pretty much well the big picture. So here is an adaptation of part of one of my recent weekly New York coffee commentaries which covers the long-term picture, and I quote, "There's something else I'd once again like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 40 weeks ago, and I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025, when I earlier reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for bright red neckline on my monthly chart, currently at 277.34. Say 277.35 to be just to round it. The break higher over this neckline reached its primary target on the upside, but there was a secondary much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75. That's quite close in the scheme of things. Prices did indeed turn lower up at this key combination of the 100% projected Fibonacci line and the target at 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August, that's last year, the market started to form a base on top of the bright red neckline, a horn bottom if you will. August, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high as we saw back in February, before dropping lower and setting up September as a monthly bearish harami. However, since then prices have not carried on lower, and indeed started to move higher instead, at least the closes have, though the monthly highs have still been lower. We had a combined bullish piercing line pattern and bullish double in October, and November's close was sort of followed through higher, though not in any spectacular way. Now we have congestion between 371.25 and 375.25. I've also quite steep action, especially for a bullish shift pitch hawk for the October 23 to August 25 bullish shift pitch hawk. Here we are between the middle time above, which is currently at 401.60, and the lower time below, currently at 306.45. I don't favour this pattern much, but is nevertheless still there. Meanwhile, on the downside, well, the real key, will be the bright red neckline below. However, the old 50% projected Fibonacci line at 347.20 also looks interesting. I should point out one more final feature on this longer term chart. possibility that we may form a very large bullish half hesitation or a possible bearish double top, all the contrary implications both these patterns may have. I will not discuss this last point any further this time, as it's way too early to isolate which will be which. But in all this, I ask you, please remember these here are on this monthly chart are longer term, in some cases very long term patterns. And that's the end of that really long quote. That all sums up the main points in the longer term view, but I would add two further items to consider. We have the green 2-year moving average currently at 303.80, reinforcing the lower time. This looks like it may continue. Secondly, we have the 1-year moving average on top of the market, if barely, and that's currently at 355.40. I think this latter one may give a false impression that the market is bracketed in between these two moving averages. It's not bracketed. To me, the 2-year moving average is stronger, especially with its association with the lower time. And I think instead the 50% Fibonacci line of the 2025 move at 353.5, which just happens right now to be close to the 1-year moving average, and the 50% projected Fibonacci line at 347.20, they are more significant and the ones to watch, especially the 50% Fibonacci line for 2025.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.